Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hey, everybody, welcome to the SED Zoom call. It's October the 10th, 2024, and today we've got a special treat. We're not going to go and talk to a CEO of MicroCap. Today we're talking to a fund manager who likes to talk to CEOs of microcaps. We've got Mathieu Martin, manager and I guess founder of Rivemont MicroCap Fund, and also a good friend of ours, a big proponent of Canadian microcaps. So happy to have him here. Today we're going to go through Matthew's process, more information around his fund, and just ask a whole bunch of hopefully intelligent questions that he'll answer for us. So Mathieu, I'm going to hand it over to you and I'll just let you go through with your presentation.
Perfect. Thanks, Paul, and thanks everyone for joining. So like Paul said, I'm going to give you an overview of my fund and especially my process, how I find ideas and how I select companies to invest in. So just a quick disclaimer to start, this presentation is for informational purposes only. I'm not making recommendations or investment advice. So just a quick overview of the firm. So I'm not the founder of the firm. The firm Rivemont has been in business since 2010. We're based in Quebec, registered in most Canadian provinces. It's 114 million in assets under management, and most of it is in traditional strategies. So we do private wealth for high net worth individuals. So most of the clients have a portfolio of about 10 stocks with some bonds and also different allocations to our alternative funds. We have a long short hedge fund, a crypto fund, and also the microcap fund that I will present today that I manage full time. So this is the team. It's just a team of two, me and an analyst. So my background is a bit unusual. Previously I was a poker player. I made some money playing poker, and at some point I had savings that I wanted to invest. I had no educational background in finance, didn't go to college, and through poker, I met one of my good friends, Philippe Bélanger. And at the time, he was investing in microcap companies and he had studied in finance. So he had like the traditional background. And he just told me about his strategy and how you could develop an edge in the microcap market, basically, finding overlooked opportunities looking where the professionals are not looking. So I started, actually, I told him, give me 2 stocks to invest in just to get me started. And one of his recommendations was Expel, which unfortunately I don't own today, but it was the first stock I ever bought was Expel. Sold it way too soon, obviously, but the stock started going up like almost immediately, and I was hooked. I was like, okay, this is really interesting. I can see how I can make money in this market, and I started studying. I started reading books, attending conferences, meeting people. Around that time, also we started a blog called the Space Microcaps, and our goal was to share educational articles, some of our investment ideas. We started doing events in Montreal to build a community here, and slowly but surely, built a reputation in the microcap space, and that led us to start the Rivemont Microcap Fund in 2018. So we partnered with an existing asset management firm that already had the infrastructure, the portfolio management team in place, so that allowed us to start quickly. And then a few years later, I went and got my CFA charter to become eventually a portfolio manager of the fund in 2021. In parallel, so eSpace Microcaps, I don't write on the blog anymore. It's been a few years since I stopped writing there. I started a newsletter on Substack called Stocks and Stones last year. So that's kind of my new project. If you want to follow me, it's a free newsletter. I post almost every week about the Canadian microcap space, and also I share some personal stories as well in there. So if you're interested in some content, I encourage you to subscribe. Last thing I want to mention about my background is that most of my personal portfolio is invested in the fund on the same terms as the other investors. So I'm very aligned. I want to make the fund a success because my capital is invested, and also my friends and family's capital is invested in the fund. And Philip, our analyst, is joined us about 4 years ago. He was previously a commodity trader. He was trading electricity. So when I saw his resume, I didn't feel like it would be a good fit. But when I interviewed him, I quickly realized that he was like very passionate about the space. He wanted to transition to more fundamental investing, and I think he read like every single article I posted on eSpace Microcap since the start, and he was super knowledgeable about what I was doing and my strategy. So I quickly realized that he was the guy for the job, and I haven't been disappointed. So let's dive into the strategy. This is very basic. What I consider microcap, or at least for our mandate, is a company that has a market cap of 300 million or less. And the smaller the better. What I'm looking for typically is below 100 million, but I'll look up to 300 million. These are just some examples of companies that started as microcaps and went on to become very large companies. I'm sure everybody knows all these names. The ecosystem has changed a little bit in recent years because companies stay private longer. So the goal here is not to say that all the big companies of tomorrow will start as microcaps. I don't think that's the case, but I still think we can find very interesting opportunities out of the microcap space that will graduate to become large companies over time. So our investment thesis, basically, I think the Canadian venture market is a good incubator of high quality growth companies that are emerging. And these companies are overlooked for structural reasons. They're too small, especially below 100 million in market cap. They're just too small for the institutions. They're not liquid enough. They don't move the needle. They don't generate a lot of fees for the investment banks. So for all these reasons, no professionals are looking at these opportunities. And and by the way, there's a lot of junk also in the microcap space. But if we do good fundamental research and we turn over a lot of rocks, I think we can find a few very good opportunities that are completely overlooked. And if we can find a few of them every year, I think we're going to do well. So these are just a couple of stats about the TSX Venture. It's a bit dated. It's about two years old, but 33% of the TSX listed companies on the big board were TSX Venture graduates, and 55 TSX Venture graduates at a market cap over $1 billion. So it just shows again that some not necessarily large, but larger companies come out of the Canadian microcap space on the TSX Venture. This is an overview of the Canadian market. If you look at the top of the pyramid, the first two levels at the top, large caps and small mid caps, it's about, give or take 400, 450 companies. And those are the biggest, the most liquid, the most followed. Most of the investment professionals focus there. And at the bottom of the pyramid, you have microcaps. It's a very large space, 2,800 and more companies that are available to invest. And basically nobody looks there. So it's a very inefficient space. It's a very large pool of opportunity for us to look at and sift through to find a few overlooked opportunities. This concept I kind of stole a little bit from small cap discoveries. I'm sure many of you will be familiar with the concept. So, we try to find companies that are on the left side of the slide in no man's land. So to me, no man's land is below 100 million in market cap. These companies have low trading volume. They have no analyst coverage, no institutional investors. It's tough to raise capital. But in some cases, some companies still deliver results, even though it's challenging. They execute their business plan, they grow their revenues, their profits, and they slowly get discovered, usually by retail investors first. And once they cross the 100 million market cap, we kind of see an acceleration of the discovery process where you might get a few analysts that start covering the company, a few institutional investors get involved, the liquidity improves, it's easier to raise capital if they need to for growth purposes. And eventually, those that do really well become fully discovered. They kind of graduate outside of the microcap space. They become small caps. The valuation multiples expand very quickly. The stock price increases very quickly as well. It gets included in indices. All the major funds own it. They become very well known in the community. So typically, that's where we look to. In a perfect scenario, that's where we look to exit and recycle the capital into smaller opportunities. The process to source ideas, I try to make it as repeatable as possible. So the main thing I do every morning, I skim through all the public filings on the Canadian market. There are about anywhere from 200 to 1,000 filings per day. When I say filings, I mean press release or financial statements. And I look through the headlines, basically looking for some kind of inflection point. Maybe a company wasn't profitable and turns profitable, or maybe they weren't growing and start growing, or they land a new contract. Just by reading the headlines, I can quickly filter if something new is happening with the company. And by skimming through all of them every day, I tend not to miss a lot of important fundamental developments. And I also get some ideas from my network, investment bank brokers, other investors, and all that stuff. But conferences as well is a good idea generator, especially the small cap discoveries conference that I attended a couple of weeks ago. Was there were a lot of good ideas at that conference. Then if we so that's kind of the top of the funnel. So that's my role at Rivemont. I kind of filter the market that way. When I find something interesting, I pass it to Philip, my analyst, and he's gonna do some kind of quantitative and qualitative work on it to see if this could be a fit for a portfolio. So he's gonna do just a basic check of does this make sense? Should we do more research on it? And we try to narrow it down to a more manageable universe of companies that we can more actively follow. Right now, I would say we follow close to 200 companies on a regular basis, meaning we subscribe to their press releases and financial statements. Maybe we've spoken with management before. We keep in touch we stay up to date on the fundamental developments. And then when we really go deep into a new opportunity, we talk with the management team. We try to do underground research. So it can be a product demo. If it's doable, we like to do a site visit, see get a taste for the culture of the company, meet with other employees other than the C-suite. And sometimes, not always, but we've done some calls with customers or suppliers, some channel checks. So we just try to build a really deep understanding of a business to make sure we know it better than most people. The competitive advantage that I think we have as a fund, I think it's threefold. The first is the idea sourcing process, because it requires a lot of time. It's a lot of manual work. Nothing is spoon-fed to you. There's typically no analyst coverage on these companies, so there's not a lot of information available. You have to dig and look on the internet, talk to the management team, talk to other investors to piece together an investment thesis. So it requires a lot of primary due diligence. The second point is the cumulative knowledge. I've been doing this for 10 years. I've met hundreds of management teams. I have financial models and some level of understanding of a lot of microcap companies. So that gives me the ability to act quickly when there's a new fundamental development. There are companies, for example, that I've followed for like 5 years, never owned it, and then one morning I wake up, there's a news that comes out, and I think the stock is cheap, and I'm the first buyer in the morning when the market opens, because the research has been done, and I've been getting ready for this moment for maybe several months, several years. So that knowledge I think is really hard to replicate. And the last thing is structural. And this is valid also for any retail investors out there. If you have little money to invest, you can play where the larger institutions can't. So my goal with the fund is to stay below 25 million in assets under management. Right now we have 10 million. And if we stay small, I think we can keep playing in that space of sub $100 million market cap companies. And we're kind of insulated from the competition. Now, in terms of investment criteria in portfolio construction, I'm not trying to reinvent the wheel. To me, those are more risk mitigation strategies. So the investment criteria are fairly basic. I'm looking for revenue growth, profitability, good balance sheet, some form of competitive advantages, and a good management team. So fairly simple, but if you just look at this criteria in the Canadian microcap space, you probably remove, I don't have the statistics, but probably 90% of companies are off limits. So by doing that, I think you reduce the risk a lot of getting stuck in something that, a company that is not executing, or they constantly need to raise more capital, and creates a lot of dilutions and things like that. And on the portfolio construction side, we target 15 to 25 positions, but fairly concentrated in the top 5. I think right now our top 5 is about 65% in 5 stocks. The largest is 20%. So I like to bet big on the ideas I have a high conviction in. So how we build a position, typically, when I find something new, it's a 0.5% to 3% of the portfolio as a starter position, and then I watch the execution, maybe a couple quarters. I get to know the management team better. Did they do what they promised they would do? And as I build conviction, I typically increase the position over time. The best scenario is the stock starts performing, so it increases just by itself, and I average up on top, and that's how you end up with positions that are 10, 15, 20% of the portfolio. And some of them obviously don't execute as planned, so I sell them. So there's a lot of turnover in the smaller positions, and not almost no turnover in the larger ones. These are just some examples of companies we've invested in and made nice returns on them. First one is Xebec Adsorption. For a long time, it was our biggest winner in the fund. We found the company at about a $40 million market cap. They had just landed the largest contract in their history. And we bought the stock I think in the next few days after that news was published, and the stock got discovered. And it was a clean tech story at the time. Clean tech was the kind of the flavor of the day, so we were fortunate in that regard. But it became, I think it went from 0 analysts to 15 analysts covering the stock. It was trading at the end millions of dollars of volume per day. And we were fortunate to sell it around close to $9 per share, most of the position, and it eventually went bankrupt. So a bit unfortunate there, but it shows that it's important to buy at the right time. It's important to hold, but it's also important to know when to sell. And in that case, it was just so overvalued. I think it was trading at 50 times earnings, and it was close to a $2 billion market cap. So at that point, I felt like there are clearly better opportunities for me to reinvest that capital. And that's why we sold. Kraken is another example. We still own it today. We found the company at 16.5 cents in 2018. And at the time, they were doing 3.5 million in revenue, $20 million market cap, completely unknown, overlooked, and the company just executed every year. And this year they're on track to do close to 100 million in sales, very profitable. And this, the stock has been more than a 10 bagger for us so far. I still own I own more shares today than what I bought initially in 2018. So it's been a big winner for us. And lastly, Media Valley, which got acquired earlier this year. That was another of our large positions going into the year. So it was a nice win for us as well. Okay, so let's look a little bit at the numbers. So that's the snapshot at the end of September, the 10.4 million in assets under management, 18 positions. So these numbers, I kind of walked you through that already. In terms of sectors, what I avoid is anything that's commodity related. So no mining, no oil and gas. And then when I look at my criteria of growing profitable companies with some form of competitive advantages, I tend to find them in only 3 industries. Mostly it's healthcare, industrials, and technology. So we're kind of very concentrated in these 3 areas of the market. This is the historical performance of the fund. We started about 6.5 years ago. There are a lot of numbers in there, but the 2 things I'll point out: the annualized return since its inception has been 8.3%. That's net of all fees. I think it's quite low for a microcap strategy that's as risky and volatile as it is. But as I'm sure everybody is aware, the microcap space in Canada has been very challenging the last few years. The TSX Venture peaked in February 2021 and declines 50% over the next 2.5 years. It bottomed in November 2023. So the fund had a fairly similar performance, about a 50% drawdown, and we're off the bottom now, but I think we're in the early innings of this recovery. So to me, we're much closer to the bottom of the cycle than the top. And so I would expect that annualized return to be much higher over a full cycle. And second number I would point out is the performance this year. We've done really well so far, 61% return so far in 2024. And that's been driven mostly by, high quality companies that were so heavily discounted because these companies fundamentally kept doing well during 2022, 2023. Nobody cared. And some of them were trading at 5 times earnings, and it's, still growing profitable. It made absolutely no sense. So these companies have started to re-rate, and I still think we have long way to go before they're anywhere near fair value. This is the management fees. So to open an account with Rivemont to invest in the fund, the minimum investment is 100,000. And the fees are pretty straightforward. It's a 1.75% fixed fee with a 20% performance fee. Basically, anything that's above 7% net return per year is subject to a 20% performance fee. So that's my incentive as a fund manager to make sure, since the assets, I want to cap them at 25 million under management. I mean, I'm not going to be able to build a very large business with this. It barely covers the salary of me and my analysts. So my incentive, the way I will make money is with my investment in the fund, and also if the fund performs well over the long term, I will get that performance bonus as well. And that's pretty much it. So if anybody is interested to learn more about the fund, you can contact me. That's the office number there, and you have my email. Email is very easy to reach me. So yeah, Paul, I'm happy to answer any questions here as well.
Perfect, Mathieu. Thank you so much. Everybody that's listening, if you got some specific questions you'd like me to ask Mathieu, please use the chat function and we'll do that. Listen, Mathieu, first off, what is it about poker players and their ability to be good investors? I find there seems to be some sort of skill set that you guys learn as poker players that it just make you good at investing.
Yeah, well, I think poker is there are a lot of similarities. Both are games where you have incomplete information and you have to make an educated guess about the future. Both are very volatile and risky. So you have to manage in poker, it's a bankroll. You have to manage your bankroll carefully to make sure, like if you hit a bad stretch, you're not out of the game, or if you make a few mistakes. So in investing, it's portfolio construction. You want to size your bets according to the risk reward profile. And I would say the last thing, and probably the main thing that I took away from poker is the ability to manage my emotions, because you live through all that volatility. Like, especially if you look at the last few years, it was very challenging. It seemed like you would invest in good companies doing, fundamentally sound, doing well, and the stocks would get cut in half for no reason. So when you live through that volatility, you have to keep a cool head and make sure you don't panic, and make sure you can again stay in the game until the market recovers. So that was probably the main thing that I learned with poker.
No, perfect. And now we were talking just before we went on air here about kind of where we think the market is right now. I mean, you put together phenomenal performance this year, and you've been around long enough to know that when it comes to microcaps, obviously they're more volatile, but there's a long tail here. When a bull market shows up, it tends to last a lot longer than just 6 months or a year. Maybe talk about where you think we are in the market right now as far as the microcap space.
Yeah, well, there are two ways I look at it. The first one is I follow some data from the TMX group that they publish every month about financing statistics and trading volume statistics on the TSX Venture. But I mean, they publish it for all their markets, but I look at TSX Venture data, and both financing and trading volume data are down about 30 to 40% this year compared to the 15-year average. So that just shows you that there's still not a lot of interest in microcaps. There's not a lot, there's not a lot of trading volume. It's still hard for companies to raise capital if they need to. And it's a matter of supply and demand. So if there's more volume, more money coming into the market, it's gonna be reflected in volume, also in financing activity, because companies raising money will have an easier time to accommodate that demand for new shares. So if we see any kind of reversion to the mean on those pieces of data, I think it's going to correlate well with an increase in the stock prices. So I think in that regard, we're still very, very early, still very depressed compared to historical norms. And the other thing I look at is just valuations in general. There's more data available in the US, because in Canada, we're so natural resource focused that the aggregate P ratios, for example, of the indices, it's not really relevant. But if you look at the US, I think the small cap, micro cap indices on average over the long term trade at about 16, 17 times P. And typically they trade at a slight premium to the large caps. And right now it's the opposite. I think US small caps are trading around 12 times now, so under their historical average, and large caps are trading, I don't know the number now, but probably like 22, 25 times P right now. So way above their historical norms. Again, if we see any kind of reversion to the mean, small caps will outperform compared to large caps, and it's probably not going to be a few months, it's probably going to be a few years. So on both of these fronts, I think we're still very, very early in this microcap recovery.
No, I agree. I see the same data, and I couldn't agree with you more. You presented at our conference a couple of weeks ago, and some of the data that you talked about, I thought was really important. I know we've spoken about this as well, but we're seeing a lot of private equity coming into the market. We're seeing a lot of M&A. What does that tell you, and what does that do to the market in the microcap space?
Yeah, so there have been a lot of acquisitions of microcap companies over the last 12 to 18 months. I actually published a post this morning in my newsletter. There have been 26 M&A transactions below $1 billion, and it's most of more than 50% of the transactions, the buyer was a private equity firm, and most of the private equity firms were based in the US. So US private equity firms and global private equity firms in general are sitting on record amounts of dry powder, of capital on the sidelines that they're looking to invest. And the fact that they're looking at Canadian microcaps, I think is pretty interesting. It shows that there's clearly value that they're finding here. And the consequence of that, when these private equity firms come and acquire microcap companies, it creates a capital inflow into the asset class. The shareholders of these companies that get acquired, they get a cash inflow. They typically reinvest in similar opportunities. So right now what we're seeing, the pool of investable opportunities is shrinking. There are less and less public companies because they're all getting acquired, and there's more capital chasing these opportunities. So again, that's putting upward pressure on share prices, and it's creating momentum. Momentum eventually attracts more eyeballs, maybe more traders as well, but it's going to improve the liquidity, the volume. So I think it's going to start creating a positive flywheel for the asset class.
I mean, you're clearly a successful investor in the microcap space. You've been around a lot of other successful microcap investors. What do you think are the one or two skill sets you really need? And you mentioned emotions earlier as a poker player, but is there any other skill sets you think are important to be a microcap investor?
Well, I think you have to be curious. Like personally, I consider myself a self-learner. I read a lot of books. I always try to question myself and what I do and find better ways to do it. Or I look at past winners, past mistakes, and try to find, and that's something I did in poker as well. In poker, you look at your end history, that it's recorded with a software that most poker players use, and you can go and look back at what are the biggest pots I lost or won, and you analyze, did I make the right decision? What could have I improved? So I try to do this also with my investments. I look at my history and try to figure out, should I have sold at this point? Should I have added more? I missed an opportunity. Why did I miss it? So always being curious and trying to improve, I think, is a very important skill.
It's interesting. And Annie Duke, which another famous poker player, always talks about process as opposed to outcome, right? Refining and refining the process. I think that's kind of what you're talking about here. Listen, why don't we open up to the questions, and then we'll wrap up with a few more I've got here. But let's see what we've got here. So Nolan asks, as far as the fund, do you participate in IPOs?
I can participate in IPOs and RTOs. Again, going back to studying my track record, I think last year I was curious, how do I fare investing in IPOs, RTOs? So I went and looked back at all the deals I did, all the financings I participated in for IPOs, RTOs, and every single case, 100% of the time, the stock came back below the offering price within a year or two of investing. So that doesn't mean that no IPO RTOs are successful, but my personal track record with it was not very good. So I figured that it probably wasn't the best place to fish for new ideas. So I still look at these opportunities, but I don't do a lot of them these days.
Fair enough. Perfect. Okay, next question here. Starts off as a statement here. It says, phenomenal presentation. I agree. Curious if can please elaborate on if or how your fund can accommodate investors from the United States. Do you take on U.S. investors?
Yes, we do. Actually, it's we onboarded our first US investor a few weeks ago, so it's still new, but from what I've seen so far, I mean, we were able to open an account. We're still in the process of getting there are two guys, and we're still in the process of getting them actually invested in the fund. But so far, I think it's gonna work. So yes, we can onboard US investors.
And then the second part of the question is any particular nuances that USA based investors might want to be aware of prior to pursuing the process?
Well, I would recommend but actually two things. The first is the investment is in Canadian dollars. So you have a foreign exchange exposure. And the second thing, I would advise consulting with your tax advisor, because I'm not sure what are the tax implications of holding a Canadian mutual fund for a US investor.
Fair enough. Perfect. Always helps to talk to a tax advisor in these cases. Okay, so Deep Patel asks, while taking positions in low liquidity companies, how do you tackle that? And what's the strategy to build a position, if you can share something about it?
Yes. So private placements are a way to do it. If the company is looking to raise growth capital, we buy some of our positions through financings. For example, the Simply Solventless deal that Small Cap Discoveries put together, we participated in that. That's how we built our initial position. If not, I can try to find blocks. That's like the network I've developed over the years with other investors and brokers and investment banks. I've been trying basically to map out like who's active in the microcap space in Canada, and sometimes that allows me to find blocks on companies that I want to buy. I can give you maybe just one practical example. We bought a company called BQE Water earlier this year. The stock was super illiquid. It was trading a few $1,000s of volume per day. So I spoke with management. I told them, like, I like this, I like the opportunity, I just can't buy it. And they found a block. They found a large shareholder that they knew that who had been around for a long time, and he had a block to sell. So we were able to get most of our position right away in one block trade. So that's another way. And if we can't find any way, any sort of blocks or financings, then we just buy in the open market, and it's not too bad. Typically when you start buying and the stock price starts to increase a little bit, you always get some sellers. So it's not as challenging as you would expect.
Yeah, I mean, liquidity is always a function of price, right? If you get it up high enough, some selling comes in. But I would imagine in a case like that, you find a block or you participate in private placement. Do you still continue to add afterwards if, for whatever reasons, if they're continued to execute? But how do you go about adding to your position?
Yeah, so typically, I when I buy the starter position, I like to wait at least 1 or 2 quarters to see the execution. Because, when I go in, I have some expectations. My thesis is they're going to grow X percentage, or they're going to do whatever, they're going to announce something. And if they do, and like they hit some of the milestones on the roadmap that I kind of picture in my head or in my model, then I'm going to add to these positions. And usually as they execute and they put out good news, good financials, the liquidity tends to improve as well, because maybe the stock price improves and it gets a bit more liquid. So BQE, going back to the BQE example, when we bought, it was trading a few $1,000s of volume per day, and lately it's been trading. I don't have the exact number. I haven't checked recently, but there were several days that it was trading over $100,000 of volume per day as the price doubled. So now it's fairly easy to buy and sell the stock, way easier than it was a few months ago. So.
As their friend Ian Castle says, don't worry about liquidity, worry about being right? If you buy the right stock, liquidity will come.
Yeah, exactly. It was when I started out, it was one of the articles that influenced me the most. This one specifically by Ian. So yeah, totally agree.
Yeah, fantastic. Okay, so Ray asks specifically about an old stock that was successful for you, but the ZBAC. What went wrong? And I guess what did you learn from that experience?
Yeah, so what went wrong with the business is that they bid on several. So it was a clean tech company. They were bidding on big clean tech projects, and they were basically quoting their clients for building specific systems, and they miscalculated some of their costs and ended up being way over budget. When they built the systems, they actually had crazy cost overruns on some of their projects that they had quoted. So they had to deliver many systems at a loss. So that got them into a liquidity crunch, and eventually they just didn't have any more liquidity, couldn't raise financing, and it went bankrupt. It was pretty quick process, actually. It was kind of shocking. But what I learned, I mean, I got out at the right time, so like it wasn't a painful lesson for me, fortunately. But the lesson I would share is maybe like when you start to see cracks in your investment thesis, like for example, the cost overruns. I mean, they had a few weaker quarters where they started talking about these kind of problems, although it didn't seem maybe so big of a problem at the time, but you started to see cracks in the thesis, and the stock was trading at a crazy valuation. So at this point, like, just get out. Like it's just in terms of risk management, I think getting out was the right decision. So I'm fortunate I did at the right time.
I think, yeah, the combination of extremely high valuation and some of your thesis starting to break down, I think it becomes pretty evident, sort of the smart thing to do. Okay, so Hassan has asked, can you talk more about selling? And it says, I think you sold P&G once, for example. Why and how do you think of something like that? Like when you talk a little bit about the ZBAC as far as valuation, but what else do you look for when it comes time to sell?
Yeah, so valuation obviously is an important one. When my thesis is broken, the company is not executing as I expect, I will sell regardless of I'm up or down on the position. I don't care. I've sold stocks at 75% losses. Like if it's a bad company, like I don't care about profits or losses. I'm just gonna take the loss. Other than that, I would say one consideration that I didn't really have before that I have now with the fund is I have to think about risk management, because it's not just my own portfolio, it's other people's portfolios as well is invested in the fund. So the Kraken example that the person mentioned, because I think I told it on a podcast earlier this summer. Kraken was our biggest position, was about 25% of the fund, and I'm following the company very closely. I've been following it for 6 years, and I am very knowledgeable about it. And I had set up Google alerts for some of the tenders they were bidding on in Australia, and I got an alert one day that the tender process had been canceled. Basically, the government kind of killed the program that Kraken was bidding on, and I thought it would be perceived as negative by the market. So it doesn't change necessarily the long-term thesis, but in the short term, it could have led to maybe a 20% stock decline if the market perceived this as negative, for example. So I'm just sitting there thinking about, like, yes, I'm invested for the long term, but I have investors, and taking a 20% haircut on a 25% position might be painful in the short term. So at that point, I decided to trim the position just to reduce the risk. And finally, the market didn't overreact on that news, and the stock kept doing well. So I'm still okay with that decision, because again, to go back to what you mentioned earlier, process versus outcome, I think the process was sound. Mitigating the risk at that point, I think, made sense for this particular, or for these circumstances, and the outcome was not what I expected, but I'm fine with that.
Any painful lessons you're willing to share through your sort of experience here?
Well, I think the most painful lessons I've had, and there isn't one in particular, but every time I invested in anything that was commodity like, a company that has an undifferentiated product or service, no moat, no competitive advantages. Most of the time I invested in these types of companies because I thought highly of the management team. And I thought, a good management team could do something great with the bad business. And that's not proven to be true from my experience. So, it's important to bet on management, and, it's very important in my process to talk to management and make sure I like them and I think highly of them.
Mhm.
But I shifted my mindset. I shifted a lot on that front over the last, maybe 2-3 years, of focusing way more on understanding the business and the moat and how the company has something that's differentiated and maybe protected in some way. So I would say, yeah, those were the most painful lessons in general.
Yeah. Perfect. Okay, so we had the question here. I knew somebody was going to ask, but what are your top 3 ideas that you're willing to share?
Yeah, well, I was expecting that question, and unfortunately, we don't share the top, the top 5 positions. For us, it's 2/3 of the portfolio, so those really are the most meaningful ones. We only share them with clients, so that's one of the benefits of being a client of the fund. You'll get our top 5 ideas every month. We send a 1-pager to clients with some details about the portfolio, and also I have a monthly commentary where I talk about what went well, what didn't go well during the month, what decisions did we make. But I shared a couple names on this call. BQ Water and Kraken Robotics are in our top convictions right now.
Yeah, and to that note, I mean, I highly recommend, if you're not following Mathieu on Twitter, or at the very least getting his newsletter, I highly recommend you do. He does put out some really good information and a good sort of recap on a monthly basis in the microcap space. Mathieu, what's the perfect profile? Like, what's the typical investor, or who should consider highly investing in your fund?
Yeah, good question. So obviously, high net worth individual, because the minimum investment is $100,000. I would say someone who's comfortable with a lot of volatility. I always tell prospective clients, are you okay with a 30% drawdown minimum? Because I can assure you it's gonna happen at some point. It happened in the last few years.
Yeah.
So to me, it's unlikely it will happen in the short term, but we never know. But it's gonna happen over the next cycle. That's for sure. So someone who's comfortable with that. I think someone who understands microcaps or finance in general, but doesn't have the time to manage it themselves. Because I walk you through my process. It takes a lot of time to look at all these ideas. It's a lot of research to keep on top of everything. So I think someone who understands that opportunity but doesn't have the time to execute it themselves, I think is a great profile for our fund.
Fantastic. Mathieu, is there any key thing you want us to talk about today? Any key sort of takeaway you want to make sure everybody walks away with today?
Well, I think we covered most of the important stuff. Like, I can just reiterate, I think there are still a ton of opportunities in Canadian microcaps right now. We're in the early innings of what I think is a multi-year recovery. I think valuation multiples are likely to expand from here rather than contract, because we're very near the bottom. And yeah, I'm just very excited for the next few years.
Fantastic. Okay, so we've got on the screen right now, we've got your email and your contact information there, but maybe give us your Twitter handle and where people can get access to your Stocks and Stones newsletter.
Yeah, so it's a Substack newsletter. It's called Stocks and Stones. If you Google it, you'll probably find it. And on Twitter, I'm at stocks_stone. Stones, sorry, with an S. And you can also find me on LinkedIn. It's just my name. So I'm mostly active on X and LinkedIn. So all my content is published there.
Fantastic. Awesome. We've been speaking with Mathieu Martin, manager of the Rivemont MicroCap Fund. Also a great guy. Stay away from him at the poker table if you see him. Always fun to talk to Mathieu. Listen, can't wait to catch up with you. Continued success. Congratulations so far. And if there's anybody that needs more information, you can either reach out to myself or reach out to Mathieu directly, as you see there on the screen. Mathieu, one more time, thank you for joining us, and we'll catch up soon.
Thank you very much, Paul. Appreciate it.
Bye for now.